So plan ahead. In the short run, Tesla is a great investment. Tesla is facing problems because the costs of retooling the factory are going up. If your goal is in the next 1 to 2 months, don't think about Tesla. But if your goal is in the next 3 to 5 years, think about Tesla. Putting money into Tesla is still a good idea. It's just a stock with a lot of value. While numbers show that individual buyers are getting back into the stock market this year, they don't all love Wall Street the same way though. Vander Research says that while individual investor flows into U.S. stocks are at levels not seen since 2020 to 2021, the move has been led by Tesla Incorporated, whose shares had their worst year ever in 2022, and stocks that are exposed to a hot new technology. Many things make me dislike unions a lot. If you work at Tesla, you might get paid less in cash, but you get stock options. Those workers did very well at Tesla when the company did well and went up 1,500% in 4 or 5 years. It's pay for work done. Now, if Ford paid the same, it's just that Ford stock has never gone anywhere. Folks in the Ford union aren't saying, give us stock. They want you to give us money. That's the difference between a really exciting growing company and an old industrial company that's almost done with business. In a note, Marco Lucchini, Senior Vice President, Giacomo Pierantoni, Head of Data, and Lucas Mandel, Data Science Analyst, said that demand for Tesla shares is rising at a rate that has never been seen before. Demand for stocks related to artificial intelligence is also rising, but not as much as demand for stocks in the FANG group. Early this year, even though it was the worst year ever for Tesla shares, individual buyers still had faith in the company and its billionaire CEO, Elon Musk. Retail traders like these have kept buying shares. According to studies from vendors, they were big buyers every single day in December of last year. In fact, their net purchases hit all-time highs in both December and the fourth quarter. At the time, it looked like they would get a small reward for being reliable. In New York, Tesla shares ended the day 3.3% higher at $112.71. This ended a 7-day losing streak that had pushed them down 70% that year and taken almost $720 off the market value of the company. The drop was caused by rising interest rates, which hurt growth stocks, worries that demand will drop in a recession, and worries that Musk's purchase of Twitter will take his attention away from Tesla and make him sell more stock in the social media company to keep it going. At one point, the drop made it the third worst performer in the S&P 500 index this year. According to Reuters, Musk told employees that they shouldn't worry about the crazy stock market. The news came from an internal email. For Tesla's diehard fans among retail investors, the risks to demand for electric vehicles or Musk's obsession with Twitter haven't been enough to turn them off from a stock that became one of Wall Street's biggest winners during the pandemic. A top strategist at Vanda said that individual investors have bought more Tesla stock in the last 6 months than they did in the 60 months before that. For big buyers, it's a great place to sell, whenever there is a buyer who isn't following the basic signs. Small buyers in Tesla are still optimistic this year. People are actually buying Tesla stock because the shares are on one of the longest winning streaks in history. Vanda says that Tesla shares were the best buy for individual traders in June, but research data showed that small investors lately got some bad news about Tesla. Tesla's deliveries in the third quarter were much lower than what Wall Street expected. This was a big drop from the company's record-setting number of deliveries in the second quarter. Tesla said a few days ago that it made 430,488 cars and delivered 435,059 during the third quarter. Compared to Q2, Tesla deliveries dropped by 6%. The EV company said the drop was because of planned downtimes for plant upgrades. The company shipped 15,985 Model S/X cars and 419,074 Model 3 cars in Q3, as talked about on the most recent earnings call. Tesla said again on Monday that it wants to make about 1.8 million cars by 2023. FactSet says that before the report, most analysts thought that there would be about 461,000 deliveries. Other Wall Street figures, on the other hand, put the number closer to 455,000. Tesla briefly shut down factories and slowed down production in general. Some of that was due to improvements in production for the updated Model 3 in China and the upcoming Cybertruck, but it looks like Tesla was trying to get rid of its growing stock. The world's biggest EV company shows full earnings for the third quarter and will hold its earnings call by the middle of October. It's important to note that Tesla bulls were already looking past Q3 deliveries, betting on a strong Q4 comeback and the launch of the Cybertruck. Wedbush analyst Dan Ives, a longtime Tesla bull, wrote on Friday that the company is about to enter the next stage of growth around the world. In China, the refreshed Model 3 will be the main focus, and production on the Cybertruck will begin around Halloween. But recently, Emmanuel Rosner, an analyst at Deutsche Bank, gave a more negative outlook. He lowered the firm's price goal on Tesla stock from $300 to $285. Rosner thought that Tesla would deliver 440,000 cars. Rosner also thinks that the average estimates for 2024 could go down a lot because volume growth is likely to be slow. Deutsche Bank thinks that only 2.1 million units will be delivered in 2024, which is less than the present consensus of 2.3 million units. Rosner also thinks that EPS will be $3.90 in 2024, which is less than the profit level in 2022. FactSet says that Wall Street thinks the company will make $4.68 per share in 2024. You might be thinking why small investors are putting so much money into Tesla shares. Well, the stock market is seen more and more as a bet on AI, and it's also the leader in the space of electric vehicles. Based on vendor data, retail traders have become more bullish on the electric vehicle maker this year. The 10-day moving average of retail flows into Tesla far outpaces retail flows into other EV stocks, as well as flows into AI stocks. Retail purchases of EV stocks, other than Tesla, only make up 6% of daily average Tesla purchases. They also only made up 5 to 10% of daily average Tesla purchases in the fourth quarter of 2020 and the first quarter of 2021, when the most money came into Tesla. Vanda says that more money isn't just being put into Tesla because people think it will be the best EV company. The rise in Tesla stock in 2023 is partly due to people's excitement about AI technology, which has also caused big cap tech stocks to rise in 2023. The study group said in a note on Thursday that this doesn't really look like a return of the EV theme from a retail point of view. For now, we can say with certainty that small investors see Tesla more as a stand-in for AI than as an EV story. Also, big buyers have put more money into Tesla, the note said. This shows that people want Tesla stock even more. Elon Musk, CEO of Tesla, has been warning for a long time about the risks of AI, but he has been teasing for months that Tesla might use AI in its own business in response to the buzz around ChatGPT. In April, he secretly started a new AI company in Nevada called XDay. He said that this company might make a product called TruthGPT that would compete with ChatGPT. The economy is still weak, even though Tesla had a good year in 2023. High prices and interest rates are still hurting the market as a whole. The company has cut the prices of many of its car models over the past year to compete with other companies. However, these price cuts are eating into the company's profit margins, which worries Wall Street experts and investors. Overall, Tesla has been a favorite among small investors who are betting on the switch to clean energy and fans of Elon Musk, the company's often controversial CEO. It is worth about $782.74 billion on the stock market. Tesla is a very valuable company that is one of the biggest in the world. In June 2010, the company put its shares on the stock market for $17 each. In 2010, the stock was worth about $1,000. As of March of this year, it had gained more than 5,700%. Based on Wall Street Zen, the biggest group of shares were owned by individual investors, who bought about 1.36 billion shares, or 43.16%. Institutional buyers owned 42.84% of the stock, or 1.35 billion shares. This is less than the 43.01% share they had last year. The executives owned 442.8 million shares, or 14% of the stock. Simply put, regular people who buy in stocks have high hopes for Tesla and its stock. Sign up to get more.